Hello, fellow traders. This is Gabriel. Welcome back to my channel, Forex.Real.Trader coaching sessions. Today with another educational video about a bullish candlestick pattern that is very interesting and very common to be seen in the Forex markets. And I'm talking about the bullish engulfing pattern, right? So the bullish engulfing pattern is a very simple structure of two candles, right? So it appears at the end of a correction, at the end of a downtrend, right? And the first candle, as you can see here, is a small bearish candle. The second one is a large bullish candle that fully engulfs or swallows, right, the previous bearish candle. As you can see here, it means like this. The bull candle is larger, right? Remember that the bulls open low and close high. And the bears, right, open high and close low. In this context, the bull, right, somehow eats the bear. That is an engulfing pattern. Okay, simple. Okay, what is the psychology behind this pattern? It means that the first candle, right, suggests that the bears are still in control, but somehow the second candle, being larger and engulfing, right, the previous bear candle, is somehow showing a buying power, overwhelming the bears. But of course, and I repeat something that every time I say in my videos is, we cannot rely only on one pattern. Let's see our charts. I previously searched my charts in order to save time in the video, and I identified this very nice bullish pattern. We can see that according to the formation of my EMAs, right? So I have my 200 SMA, I have my 50 EMA, right? And I have my 18 EMA, right? Okay. So they are in the order that suggests that this is a bull trend, all right? That is the first thing to identify here. And then I observed this formation here. Look at this. This is the correction, okay? This is the correction here, okay? It's coming down, coming down, coming down. And somehow, yes, this bear is strong. But the next candle, right? The next candle that we see here, this one, right, is a bull. And look at this, slightly engulfs the bear, okay? So it's valid. But again, this is just the identification of a pattern. Remember, we do not trade just based on a candlestick pattern. We need a lot more signals in order to pull the trigger. This is somehow one more signal, powerful, yes, it's powerful, but it needs confirmation in order to be executed. Now comes the question, okay, what are the rules that I eventually need in order to trade a bullish engulfing pattern? The very first thing is to remember what? To be patient and disciplined. It means that once I wait, I am on my 15 time frame, 15 minutes. So I just gotta wait here 30 minutes, right? So after the 30 minutes, the second candle here, the bull candle, has closed. And I confirm, in fact, that it closed, okay, above the bear candle. So it engulfed. Okay, so I'll place my entry point. In later sessions, you will know how to do this properly, the ratios, the proper leverage according to the size of your account, etc. Here is just to keep on training, right? Training on what? Training on observing the different patterns that I want to identify on the charts. Second, Because every time that I place a trade, I need to be disciplined enough to do what? To be patient, to be disciplined. And when I execute the trade, I need what? I need to place my stop loss and my take profit. Those are the rules, right? Discipline and organization in every executed trade that I play on the market. All right, so I just set in here my entry point. Now comes the second step. All right, what's gonna be my stop loss here to be, a valid trade that worth it? So I can see that I can set 14 pips for my stop loss. All right. So if I set here my stop loss right below the wick of the engulfed, the bear engulfed. So it means that if I'm risking 15 pips, is because my ratio eventually could be 1 to 2 or 1 to 3. So if I am risking 15 pips in my stop loss, means that I am aiming for 30 pips in my take profit. All right, so let's see where, just to see if it's worth it, it should not be above this level. Let's see where I can get my 30 pips. 30, 10, 15, 17, 20, 24, 30. All right, it's a good one here, right? So just right here, I have 30 pips. So I'll place my take profit right here. Okay. So I don't execute directly in the market. I like to place buy stops, or depending on the case in the moment in the market, okay, I'll buy limit. Okay, but later on, I will explain everything about that. Remember, here is only the moment of identification for patterns, no more. Okay. All right. So I just have here my setup, right? So let's see what happens eventually if the trade had been executed. All right. It activated, it triggered. Oh, okay, that's it. Awesome. Let's explain this. When I entered my trade here, right, when my candle closed, right, I placed my buy stop here on this point. In the next 15 minutes, there was a kind of a correction candle, this one, okay? It was 15 minutes, okay, after I placed it, right? Okay, happened other 15 minutes. The next candle was a bull one, okay? And it triggered here after 30 minutes, my trade was triggered. Why? Because the wick indicates that my price was hit. So my entry point was effective. But what happened? Retrace. But no problem. I have my safe net in here with my 15 pips, right? So I maybe retrace, maybe not. Let me tell you exactly how many pips it retraced. This one once was triggered, retraced 7.5 pips. Perfect, because my stop loss is 15 pips, so no problem. Okay. The next candle, what happened with the next candle? Now it's a bull one, okay, and it started to show higher highs, and the next the same, and so forth and so forth and so forth, and reached my take profit. Okay, so that is how we should analyze every time a potential entry. Okay, and this was a very nice bullish engulfing pattern. Okay, of course, remember that we should, depending on our trading plan structure, I mean, I said a wrong word here. It's not we should, it's we must. We have to use all the other tools that we have in our trading plan in order to support the decision of trading any candlestick pattern. Okay, in this case, with the bullish engulfing pattern, we should take, for example, into consideration MACD crossovers, also the patterns with the Fibonacci retracements, right? In order to make it more valid, right? Remember, this is just an exercise of identification. Later on in the course, I will show you different strategies in order to accurately trade not only candlestick patterns, but the whole picture on the charts. Just a little reminder, if you find my channel and my information provided here as a useful, interesting, and somehow important in your trading and learning process, please subscribe, like, and share, right? So we can continue building this awesome community of real traders. So my dear people, thank you very much. See you in the next video.